Hi, everybody. Jared Johnson here with DayTraders FX, and Happy New Year. I hope everyone had a great holiday break and a good Happy New Year. I hope everyone's happy and healthy, and I'm happy to be with you guys. We have a lot of things to talk about going into the beginning of the year, and I want to show you what some of those things are because there are some very important details that we need to keep in mind. We've got there's a lot of news stirring around, right? On one hand, we've got vaccine news, and on the other hand, we've got another election that's on the brink of who knows what. And so the market's in an interesting place, and let's talk about what that place is and see if we can make sense of some of this. So I'm happy to be with you guys. Let's get right over to the charts. I'm going to share my screen here, and we will get rocking and rolling. Okay. So if we go over here, let's just have a little look at like SPY, for example, or just the S&P in general, right? SPX, SPY, all giving us the same picture. I would like to say that my theme of everything right now is spaces, right? Spaces. That's what I'm seeing everywhere, and the spaces are making me a little curious. We've talked a little bit about this in the past, but I want to make sure that everybody understands how important this is because this is going to tell us a lot about what the market is doing and up to. If we look at S&P right here, we say, okay, here's these big spaces, right? What do we have right here? Look at this weekly chart. We've got a big, fat space. And this big, fat space makes me a little bit cautious and curious about what might be coming in the very near future. We already have this area here. You can see this big broadening pattern here where the market has been doing this kind of stuff, right? We're just kind of getting bigger and broader and so on. So we're sitting at the top of that up here on SPY. But the biggest thing that is catching my attention is the amount of space that we have from current price to some of these key moving averages. I love to look at the 200 moving average. It's such a good one to look at. And the question that I have is what happens when we see these kinds of massive spaces, right? Big space here. We had a pretty big space there pre-corona. We had a pretty big space here pre-2018, drop. So we start seeing these big spaces, and that's where small to medium corrections can happen. Right now we're in Space City right here. I mean, this is about as spacious as it gets. I'm going to be really curious as well to see how this candle ends right here. We've got quite an interesting little candle here. And that's going to be important as well. What does a hanging man mean on a weekly chart? That's a big deal. So as we look at these spaces and we say, okay, how are we going to participate in this, right? So let's look at a couple more charts and then let's talk about how we can hopefully make some sense of this market and what we can trade. Big spaces in S&P. Where do we have the whole outlook on the dollar index as well? Big spaces. Now the dollar index is in a big downtrend. I've been pretty bearish dollar index for a while, but I'm starting to think to myself, this is probably a spot where we need to start considering what happens when we have these big spaces, right? Big space right here. We had a lot of consolidation and a pretty big pullback. Big space right here. And, where do we go from here? Where is the dollar index right now? It's at a pretty key area that has caused consolidation in 2014, lots of it in 2018. And here we are again for some potential additional consolidation. So I look at that and I say, big spaces. Now, remember, typically speaking, this isn't every single time, but when the stock market is going to the moon, the dollar is typically going down. And so that's what we see happening right now, right? The stock market's been in this mad rip going higher, and the dollar index has been coming down. But we've got the stock market, we've got the S&P at this area that we're saying, okay, and we've got the dollar index, which is down at some pretty big support, and we have some pretty big spaces here, right? Spaces, we got to keep an eye on these spaces. So we see this happening in a lot of stocks and a lot of currencies, right? So that's the dollar index, general market. S&P, general market, big spaces there. We've looked at the VIX here a little bit, and it's at a pretty low area, and it seems to be consolidating fairly well. We'll see where that goes. How are some other stocks looking? Let's just go to everybody's favorite, to Apple. When we look at Apple here, last time we had some big spaces was over here. And what happened? We had a pretty good sell-off on Apple. A lot of consolidation, a run from 137 all the way back down to about 104. It's a pretty big move. And so we're kind of back in this space area again. Remember, there's our coronavirus space, some pretty good space there. Now we don't have quite as much here as we did in that last run there, taking us back to kind of July, but we're still in a pretty extended kind of area here. Now, can this continue higher? Of course it can, but we're starting to get to a place where I'm going, okay, is this going to be a significant double top for Apple? I don't know. It looks like it might be. We have a lot of space right here. So we have this big double top. Does it mean Apple's going to crash? No, but could Apple correct lower, $20 or $30? Probably, right? And so we start seeing this kind of stuff happening in a lot of different places. Again, Amazon had that kind of big space, big area, and we started to see a lot of consolidation. This is kind of consolidating into the moving averages, right? This is kind of saying, okay, maybe we won't go down a ton, but we're certainly going to not go anywhere and be flat and sideways. So we're seeing that kind of thing happen. Tesla, my favorite one to say spaces, right? I mean, this thing, we had big spaces back here, and we did see a big correction. Now Tesla's got, one of the biggest spaces that I've seen in a really, really long time. So I look at that and I go, okay, that looks like it's something pretty significant. So we have all these stocks that are showing us some pretty intense extension, right? I mean, is it possible for these to continue moving away from the moving averages and just kind of continuing higher? It is possible, but this is where trading is going to get tricky. Now, let's talk about a couple of currencies real quick, and then we will say what we potentially could do here. Okay, so we looked at the dollar index and we said dollar index is, has some pretty big space down here and it's heading lower. What are some other dollar pairs that we can kind of compare that against, right? Here's euro dollar, daily chart, big space right here, right? Big space, and it still is moving away from that space. So, there's something significant to be looked at there. Is there going to be an opportunity at some point to fill that gap and trade that down just a little bit? That's the question, right? When we look at things like the Australian dollar versus the US dollar, again, we have big spaces, some of the biggest that we've seen in a while, right? In kind of a long while, except for kind of coronavirus market sell-off there, but we're at a massive extension. And we haven't seen something quite that extreme since, probably 2017 or this big double top in 2018. So when we start to see that kind of stuff, I think to myself, I'm being cautious, right? It's time to be cautious, time to be careful. New Zealand dollar, what do we have here? This is a big bullish pattern and it's doing pretty well, but what do we have? We've got some spaces, right? So with these spaces, we have to start looking at the possibility of taking profit on bullish positions and starting to kind of mentally prepare ourselves for some of these bearish positions. It's going to be a bit of a difficult time here because on a lot of these stocks and a lot of these currencies, we want to follow along with the trend. We want to say, this is going up, let's trade up. But we have to start looking at these signals right here and these signs that are saying it might be time to consider a different strategy, right? To say, let's take some profit on these trend trades. Let's start exiting and protecting some of our money that we've made on stocks and on currencies and so on. I still have bullish stock positions. I have some bullish and bearish dollar positions. But I'm starting to look at this and starting to think to myself, it is time to pay very close attention to this because we're getting to an important area where the market could start to either consolidate or give us some reversals. And so when I look at that, it brings up two interesting points. How do we participate in this? How do we take advantage of an overextended market that might start giving us signals of reversal, right? How do we start taking advantage of that? I think that there's going to be a lot of stocks that continue to do well. Let me show you an example. I own stock in this company right here. This is US Steel. They're doing great. They got some space there, but I'm holding my bullish position. It's trading at 1847, and I'm in down in the 17, so it's doing good. I'm happy about this, but I'm being very cautious and very careful of that situation, and I'm going to be very careful about letting this ride too long and riding this into a big reversal that could potentially be happening just due to markets being overextended. So we want to find things that are pulling back to moving averages. I'm going to be real cautious about taking bearish trades on the stock market. I don't love doing that. I like staying bullish in the stock market for the most part. But where I think we can safely be bearish in the stock market is trading things like the VIX, right? Trading the VIX. If the VIX here is getting so low in this area, we can buy shares of VIX ETFs. I happen to own some shares here, right? And I'm watching this. I own the VIXy, and I'm thinking to myself, this is where I will be bearish the stock market. I own a bunch of shares of the VIXy, and if this thing continues to go down, I'm going to buy more shares, right? So when that market correction does happen, whether it's this week or in 3 months, I'm going to have a big profit potential to make here on owning shares of something that tracks the VIX. So I think that's going to be our best way to be bearish the stock market. Otherwise, let's be very cautious and very careful about our bullish positions on stocks, and just make sure that we're, minding our P's and Q's here, and we're able to kind of find some balance in there of taking profit, but not riding these stocks until they are so overcooked that they just crash on us, right? So we got to be a little bit careful of that. So that's what I have to say about stocks. Trade something like the VIX to take advantage of some potential bearish movement. Now, I own this VIXy down just around 14 bucks. So I'm just holding on to it. It's in profit a little bit right now, but I'm just going to let this continue to dip and do whatever it needs to do, and then I will start taking advantage of either buying more or just profiting on a potential stock market correction. On currency pairs, I think the dollar is kind of screaming here just a little bit. And I think that we may need to be looking for some opportunities to trade things like Euro dollar, Aussie dollar, New Zealand dollar back down just a little bit. With these big spaces and these big open areas, I think it's time to start looking for this kind of stuff. Now, how do we trade this carefully and responsibly and so on? You guys know that I'm a huge fan of these kinds of things, right? I really love missed pivot points. I think those are so valuable, and I think those are so important to keep an eye on. And I love that. I think those are real important. So here we've got all these missed lower targets here that is telling us that the market, probably eventually wants to get there. So I think that trading some confirmation is going to be key here. Let's watch the patterns. Let's see where things end up going. And as we get that confirmation, let's trade that, right? There's probably going to be some opportunities beforehand, but if you want to just play it real safe, watch a pattern like this. This is a big rising wedge. What do rising wedges typically do? They go like this, and they go like that, and they continue to narrow, and sometimes they really drag us out until they finally, kind of crash and burn, right? And maybe we get a real big run like that. But that's what we have kind of brewing and cooking here. So we've got to be on our toes and be ready for that kind of a movement to happen, because I think it is coming. We can see that happening pretty much everywhere on every chart that we look at. Again, big spaces on something like Australian dollar, US dollar. We see this kind of thing happening, same kind of deal, right? Rising wedge. So this is at the top of that wedge, just about. Do we have some more of this coming? I'd say we probably do. But do we have some of that coming? I would say most definitely. We must. So the best way to kind of trade this kind of thing is look for some confirmation, or just start scaling in with some real small positions and look for these movements. I'm still very bearish the US dollar, but short term, I'm getting a little bit bullish the US dollar because of how extended it is. I'm still very bearish the stock market, or sorry, bullish the stock market, but I'm becoming bearish in the short term because of how overextended it looks. So I think that's what we need to be focused on over the next couple of weeks, is these big spaces, these big signals that we're seeing. We can't miss them because they're so important, and sometimes they can be fairly subtle. But we've got to look for that so that we're ready for profit taking. We're ready for a surprise movement. We don't want surprise movements. We want to see this stuff coming. And when it does, we want to be ready for that kind of activity. So small positions on currencies, looking for some moves back. On top of it, on a lot of these currency pairs, we have things like the yearly pivot as well. Here's a yearly pivot point on the Australian dollar, all the way down at about the 70 level. It's trading at 77, 74. At 700 and almost 800 pips below is a yearly pivot. Do we have that same thing on euro dollar? yearly pivot, right? Right down here at about 117. Here we are, 123. That's 500 pips lower. You know, these are things that we need to kind of keep a real close eye on. Yearly pivot, 66.30 on New Zealand dollar. We're trading at 72.50. So again, 500-600 pips down there. We've got a yearly pivot. So those are things I want to just strongly recommend everybody keep an eye on. Stay cautious. It's going to be hard. We're going to want to participate in some of these big movements to the bullish side, right? Being bullish New Zealand dollar, being bullish Australian dollar. It's getting very difficult because we're in very extended areas. And when the market corrects, it's going to be probably very quick. And it's not going to give us a lot of time to think about it. So we've either got to start building some light, small positions now, or just hoping that you get the right timing and the right opportunity for when those corrections do happen. Again, best way to take advantage of a bearish S&P movement, which I think is inevitable, buy some shares of something that tracks the VIX. Get bullish the VIX so that when and if this makes its big-ish move down, we can profit on the VIX side of things. Okay, I hope that's helpful. Very happy New Year. These are some important things that we need to watch and look for. These are going to be some great opportunities for us. I'm very happy to be with you guys. Happy to spend a few moments with everybody, share some of the things I see in the market. If you like this, make sure you subscribe to the YouTube channel. Make sure you leave a comment with any questions you have. And stop by our website. DayTradersFX.com is a great place to learn more about what we do and why we do it. Thanks, everybody. Happy New Year. Good luck on everything, and we'll see you all soon.